It's definitely good news that holders of 85% and perhaps 90% of Greece's private debt have agreed to swap it for other bits of paper worth 70% less in the biggest debt restructure in history. All good. And markets in Europe and the US responded accordingly, because it means there won't be a run on Spain, Portugal and Italy this week. Although there are still some fundamental issues to resolve, such as the disparity in labour costs between Germany and the southern European states. Spain's labour costs have dropped significantly over the past few years, but Italy's, France's and Spain's still have a long way to go before those countries are competitive against Germany. Asian markets also traded higher today, as did share prices in Australia, rising almost 1% to 4,300 on the All Ordinaries Index. Now, the All Ords has been cycling around 4,300 for 7 months now. The global share index was also flat until the start of 2012, but since then it's gone up 9%, twice as much as the All Ordinaries. Here are some of the highlights from the local market today. Resources stocks, banks and retailers all did very well, but Qantas fell heavily after announcing that the planned deal with Malaysian Airlines had fallen through. The company said it was no big deal, but the market doesn't agree. Australia's trade balance for January came out today, and surprisingly it was a deficit. Analysts reckon it was because of Chinese New Year, but you'd think they would have thought of that. Anyway, China is rather important. Here's a chart of our trade balance. It's not that long ago it was a minus figure, but just look at it now. The Australian dollar was fairly subdued today, up slightly on the trade-weighted index and the US dollar. Inside Business's interview on Sunday is with the ACCC chairman, Rod Sims. So till then, that's finance.